So we'll try to solve this illustration. Question number 18, where we have been given opening assets and liabilities here, like cash at bank, cash in hand, furniture, stock of goods, amount due from Alex, Beam. So these are the assets and liabilities available in the year beginning, 1st April 2024. During April, the business has done these are the transactions. April up to 30, we had so many transactions. What we have to do? We have to prepare, as per the accounting equation rule, we have to prepare journal entry, pass the journal entry, and prepare the ledger, trial balance, and final accounts. While preparing the final accounts, trading and P&L account and balance sheet is going to be prepared. Actually, the crucial part is passing the journal entry. Rest of things may be automated. Okay, in practical life, we have to be very careful in recording the journal entry only. The final accounts may be prepared automatically. There are lots of softwares are there, including Tally. But of course, we have a free software also, Manager. So I'm going to use the Manager software to prepare the final accounts, trading and P&L account. It's not trading and P&L account. It's only income statement as well as financial statement. Like we can prepare that. We can prepare that using the Manager software, right? So from the beginning, I'm going to guide you how you can use the Manager software for these things, right? Now, see, you can search Manager accounting software. Accounting software. If you search this, it is available. Free accounting software. It's a free only. There's a cloud version also. Of course, it's a paid one. First, you master yourself with the free version. Of course, you can use it comfortably for a small business without any trouble. Free download. Okay, free download. So I'm going to click the free download. In that free download, is that accounting software is for which app? Which app? Okay. Is it for Windows app or Mac app or Linux? So we usually in our most of the laptops we use the Windows software. In case of Apple, you just use Mac. So it's a window. I'm going to download free. Download this one. Okay. So I'm downloading this. I'm downloading this. So once download is over, you can open the folder and install the install the app. Okay, install Manager. I'm installing this. I'm installing this. Okay, that's all. Similar to the way how you download an app from Google Play Store, you are also able to download the Manager software and install it. Now it got ready. Got it. Hope you now have this one with you. How did I do this? Very simple. I may reiterate this. I went for search and went for the Manager accounting software. And from there, see, I started with Manager accounting software search, manager.o free download, where I'm going to free download this for Windows. The file might have been downloaded in some folder. You can go and see this one, this symbol. Full download history. You can simply click this folder or you can click this one. So if I click this, it will be opening that particular folder. Okay. Now, after opening that, you can simply go on. Okay. Open that, and there in Manager, Win software, you have this one. As we already installed, I am not going to reinstall. So those who are not installed, you can install. You got installed. You got installed. Now after installation, you can open the manager software. You can open the manager software. Now this one is for Singer was carrying. We can give the name for that as Singer. Okay, add business. Add business. It's for a new business. For this business, I'm going to pass the journal entries here. So create new business. We can use SSA, Sahasri Singar Academy, like, and country India. You can choose the country here. Create new business. Now the business is created. The format skeleton is here. Skeleton is here. We got the skeleton. So the customize is for some advanced requirement. We never bother about the customize, as it's a basic one. We use only these 4 tabs. These 4 tabs are more than enough. I'll go for the setting. I have to set this, right? Feed the business details. Where is Singer Academy and all. So business detail, whatever it may be, in business detail. Where you can do all the things in settings itself. In settings, business detail, SSA. So the number being B32, Vegananda Nagar, Ramalinga Nagar. Okay, Trichy, Tamil Nadu. 62003. So we got the address typed here. We may have our logo also to be printed. If you have the logo, you can use, otherwise simply leave it. So I'm going to use the logo, as already we have the logo here. Okay. If you don't have the logo, no problem. Or you can create your own logo, probably your face, like whatever it may be. So I'm using this logo. So the logo is also inserted. Update. Now Singer Academy details is updated. So it's now having our details also. Now you have to open multiple ledgers, right? Whatever the expenses you pay, expenses account, capital account, cash account and all. Okay, that you have to do it. Let's see. I'm going to open all these things here. Chart of accounts. This is called chart of where in settings, business details, chart of accounts. Leave the rest. We can start with chart of accounts. These are the default charts of accounts there. Of course, if it is applicable, you can use, else you can change comfortably as you wish. So the left hand side, we have the financial statement or balance sheet. This is balance sheet. Right hand side, we have the income statement, P&L account. Usually P&L account, you follow the T format, but we use the vertical format. Very first instant, we have the all sort of income. Second set, we have all the expenses or losses, right? So from the income, if I subtract the expenses, you get net profit. And on preparation of the balance sheet, first you have the assets and then liabilities. Clear? So the assets will be always equated to the liabilities and capital as per the accounting equation, right? Now tell me, do we have GST here? Usually we don't have the GST. So as I already told you, if it is not required, you can simply delete it. I'm simply deleting all those unwanted things. Okay. And this one deleted. You have to feed your own account. Whatever the account you have, you can feed. Okay. Ineligible ITC, delete it. And RCM payable, not applicable for you. You can delete it. Cess, not applicable. So I am deleting. Clear? Now, so we have the assets, liabilities, under that equity. Equity will have what? Capital as well as retained earnings. Retained earnings is nothing but profit undistributed. Profit remains undistributed is called retained earnings. So I have just eliminated those unwanted things. Okay. Similarly, in the income side also, there is interest received. We can simply delete, not applicable for us. but predominantly sales will be applicable. So I keep it remain as it is. If you want, then you can keep, else you can remove it. Similarly, I can cancel all the expenses, or I can make it zero by deleting all unwanted things. Okay, you no need to have all these things, so I'm removing all these things. If you want to have, then of course no problem, you can have, but these things are not applicable. You can simply remove it. You can simply remove it. Is that clear? So only what are the things are required for the financial statement: assets, liabilities and equity. For the income statement, income and expenses. Income and expenses. The difference between income and expenses is the retained earnings or profits and losses. So rest of things I simply removed. I removed. Okay, I removed all these things. Clear? Hope now you'll be able to understand. Clear? So here we have income minus expenses, net loss, assets, liabilities on this thing. Whatever the account you need to create that. What are the account you need, you can create here. What are the accounts are in requirement for you? So I'm going to simplify this one. I'll keep this way. From the opening journal entry, we need to have cash, means bank, cash, furniture, stock of goods, amount due from Alex, Beam, Mr. Singer and Charan. The difference between the assets and liabilities is the capital. This is the opening assets and liabilities. What are the accounts we have? Bank, cash, furniture, stock, Alex, Beam and Singer, Charan. We have to create all those assets, means account here. First, new account. What is called group? What is called group? Okay, what is called group? Group is within asset, some assets may be fixed assets, some assets may be current assets. For that classification, you can have groups, grouping. And without grouping also, you can put the values. Anyhow, I can go for grouping it. I can go for grouping, so you'll understand. New group. What new group we have? Non-current asset. Non-current asset. Non-current assets represents what? Those assets are going to be held for longer period. So it is also a part of what? Which group? Asset group. In asset group, subgroup is this non-current assets. And if it is non-current assets, we have to create what? For the rest of the assets, current assets should be created. Current asset. That current asset is a part of asset only. So I'm going to create this one also under this. Create. So what happens now? You see here, we have under assets, current assets as well as net non-current assets both. Current assets and non-current assets. We need to have, okay, these two. Classification is over. Clear? Similarly, income also you can do sub-classification related to the trading, related to the P&L account. That's how you can classify, but I am not going to classify that. So I just classified the assets only. Assets only. Is that clear? Now I am going to open the account. I am going to create the account, new account. What are the accounts required? First one is bank. Cash at bank means we need to create bank account. So the account name is bank. Okay, bank account. Come on, tell me. What sort of classification for the bank account? Come on. Assets, current assets, equity, liability, non-current assets. Where it will come? It's a part of current assets. So I put the classification as current assets and create it. Create another one. So now we have created bank account. Now we have to create what? Cash account. Cash account, come on, tell me. Is part of current assets. Create. New account again. Next one is what? Furniture. So I am going to create furniture account. Come on, tell me. Is it what sort of account? Okay, what sort of account? Non-current assets. Create and add another one. Then we have stock. Stock. Okay, stock account. What about this one? Stock account. It's also current assets. Create and add. What is the next one? Amount due from Alex. Alex is part of receivables. Okay, Alex, Beam. So amount due from Alex and Beam may be receivables, right? Can we have a group for receivables? Right, we can have the group for the receivables for also for in the asset side. What I'm going to do in chart of accounts, new group is going to be created because Alex, Beam, all or debtors. I'm going to create the new group called accounts receivable, and under that I'm going to write this person's name. Right, so new group. I'm creating new group named as accounts receivable or debtors. Accounts receivable or debtor. Now tell me, under what major group this account receivable will come? Current assets only. Debtors is the current assets only. Now debtors otherwise commonly named as accounts receivable. Create. Now new account. I'm going to create the new account. What? Alex. Alex. Okay. Alex account. Clear? Under Alex account will fall under what? Account receivable. Account receivable. Is that clear? Create and add. The next one is Beam. Beam account will fall under account receivable. Create. Let's cross verify. We have, these are the assets in the beginning. Current assets, under that account receivable, where we have two account receivable, bank, cash, stock account. Non-current assets, under that we have furniture account. So we have opened all the account. We have opened all the account. Nice, no? It's very friendly. Then next one, liabilities, where Charan is a liability. So we can open one more account called group called accounts payable. Okay, new group. Under the new group, accounts payable. Okay, accounts payables. This will be part of what? Liabilities. Under the liabilities, again you can use the non-current and current liabilities, but I'm not going to open the subgroups. So only liabilities. Create. That's all. Now new account. What happens here? Mrs. Singer, okay, Mrs. Singer loan account, right? She might have given loan. Singer loan account. Okay, this will be falling under what? Liabilities. You can create this being non-current liabilities. Another one is current liabilities also. You can do, okay, if you want to more particularize this. Create and add another one. What is that? Next one, Charan. Charan account. Okay. Charan account is what? Accounts payables. Liabilities under that accounts payable. Subgrouping. Create. So what happens? We have created all the account, right? You can cross verify that. So we have created all these things. Clear? Now the balance will be the capital, right? So I'm going to create the capital also. Singer's capital. Singer's capital account. This will be classified as what? Equity. Equity means owner's fund. Under equity, you can show this being owner's fund. Create. Now see the balance sheet. So we have all the assets and liabilities here. First set assets, current assets, under that account receivable, non-current assets. But of course, you can adjust the spaces also. The first one should be non-current assets, like you can open. You can do it later. Bank, cash, stock, furniture. And under liabilities, accounts payable and equity. Under that, we have retained earnings as well as Singer's capital. This creation will be done only once. Thereafter, only passing the journal entry. So I'm going to pass the journal entry first. Thereafter, we can prepare other account also. What are the other account may be possible? There may be salary, sales, purchases. Those account are not being opened now. So we have to open those required account also. Whenever you need to open. Whenever you need to open. Now, I go for posting the journal entries. Okay. So now setting is over. Setting is for creating the account over. Now I am going to open what? Journal ledgers for passing the journal entries. Clear? I am going to pass a new journal entry for the opening. For these assets and liabilities available in the very beginning, I am going to pass the journal entry here. This is 1st April 2025. So I use this being 1st April 2025. Okay, 1st April 2025. Or 1st April 2024. Okay, I will use the same date, 1st April 2024. If you want to give the reference for the transaction, you can give. Okay, automatically the reference number will be given. Else you no need to refer this. Narration, you can give opening journal entry for the assets and liabilities. What are the items are going to be debited here? All the assets are going to be debited. So much of assets are there. And he owed, these are the liabilities and capital should be now posted here. Now come and tell me. First one is what? Bank account, cash at bank or bank account. What is the value? 35,000 debit or credit? Debit. So post that value in the debit side. What is the next one? Cash account. You just choose this cash account. What is the value for cash account? 3,700. Now, so many assets, no, you can add the lines also to the extent you need. The next one is furniture. I put the furniture value. What is the value here? 45,300. Next one being stock. Okay, we have stock account. How much is that? 3,51,000. Next one being Alex, amount recoverable from Alex account, the value being how much? 15,000. And the next one being Beam account, the amount recoverable from Beam being 16,000 debit. Add few more lines. Now Mrs. Singar's loan, credit side the value being 1 lakh, then Charan account, the value being how much? 26,000. Okay, should match. If there is any difference, the difference will be called as what? Capital account. Singar's capital account. What is the difference? The difference is shown here. See? So nice, no? You no need to use the calculator. Everything will be done by the machine itself. So we are just passing. First we are creating the account. Thereafter everything will be prepared. This value will be 3,40,000. So now it's matching. No discrepancies. Now create. That's all. This journal entry is over. Okay, so journal entry has come. Not only journal entry. What more? Reports also ready. What's that report? Balance sheet. Our setting, you just see. Reports. In reports, you just go and click this one. Yeah, summary. In summary itself, you will see all these things. So you got the balance sheet, right? So in assets, we have all the items here, total being 4,66,000, consisted of accounts receivable, bank account, cash account, stock account, non-current assets, and liabilities. Of course, you can arrange that later on. In liabilities, we have accounts payable, Charan 26,000, as well as Mrs. Singar's loan 1 lakh. Apart from that, under equity, we have retained earnings as well as Singar's capital account. We don't have any profit here. You're opening all the ledgers only once. What are the ledger account required? You open that, thereafter only selection and posting. Automatically the sum will be prepared by the machine itself. In practical life, we just feed That's why I told you, master yourself with the journal entries. In practical life, you just feed the journal entry, everything will be prepared automatically by the machines. You never bother about that. Clear? Now what happens? We have passed the journal entry for the opening balance sheet. I mean assets and liabilities. Now let's go for what next? Transaction. So we have these transactions. As we have these transaction, okay. Now, second one, wages. You have to open a new account called wages. Check. It's a bank. Already we have the bank account. No need to bother. Next one is purchases. We don't have purchases, so we have to open purchase account. That too on credit from Charan. Charan account already exists. No need to worry about that. And sold goods for cash. Then we need to open the sales account. That too in cash. In cash means we already opened the cash account. But Magesh, not required. In case of cash transaction, name is not required. And drawn cash for private use, drawn. So you can show the drawings also. You can show the drawings account or drawings account. Instead of drawings account, you can adjust with the capital account itself. Okay. So these are the 4 additional account, ledger account to be prepared. How can you prepare? Go to setting, chart of accounts. Now we have to open all these things. Where wages is what? Not assets, not liability, means not liabilities, but it's an income statement. So in the income statement, I'm going to edit this. I'm going to add new account for the P&L. These items for the P&L account item. So I'm going to open this one, new account. What are they? First, wages. Wages account. Okay. And what about this one? It's a part of income or expenses. Very simple, expenses. Create and add another one. Next one is what? Purchases. Next one is purchases. Okay. Purchases account. Come on, tell me. Purchase account is a part of what? Expenses. Then sales account. I'm going to open the sales account. Sales account is a part of what? Income. Create and add. Next one. Then drawings. We can open the drawings account if you want to open, or you can simply adjust with the capital account itself. Drawings account. It's a part of what? Okay. Drawings is the balance sheet item. So I'll go to the balance sheet. Here, add new account. What is that? Drawings. Drawings is a part of what? Equity. Drawings is a part of equity. Owner's fund, right? Create. That's all. So for these 3 transactions, what are the required ledger accounts? You just identify and open that. In a business, usually they will have around 50 to 60 account. You are going to repeat the same 50 or 60 account. Once you have created the 50 or 60 account, thereafter month on month, you are just posting that. Posting is very simple. You are not going to open the ledger account again and again. If it is being the sales account, you will open only once. Thereafter, you are going to post month after month or sales after sales. Now, I am going to pass the journal entry for the second one, new journal entry. For which date? Second paid wages by salary. Which date? Second. I am going to feed the date here. 2nd April, wages paid. Wages paid. Narration. So, debit side is what? What is the journal entry for the 2nd April transaction? Wages account debit. Value being 6,000. And the next one being, is it by way of bank account? Bank credit, value being 6,000. So, after that you just check there is no any discrepancies. If you deduct 10, automatically it shows out of balance 5,400. So, the every journal entry will be corrected there itself. Error can also be located easily. That's all. The entry for the second date is over. Create and add. Next entry is all about what? Purchases. So, the date of purchase being 3rd April. Purchases from Charan. Purchases from Charan. Okay. So, here I am going to debit what? Purchase account. Then As it is being credit transaction, party's name will be there to Charan, the value being 5 into 500, 2500. 2500. Clear? Okay, now create and add another one. So next one is all about sales. Sales to Mahesh, the date being 4th, so I am going to change the date 4th April, and it is only sales to Mahesh. Okay, in cash. Then what is journal entry? Debit the cash account, the value being 5000 rupees. Okay, 5000 only, no, yeah, 5000 rupees. And credit what? Sales. We have already created sales account. Sales account credit 5000 rupees. Create. And the next one, on the same date, we have the drawings also on the same date. Okay, I am including the date here, 4th April. Drawings. Okay, narration being drawn. Okay, so you have to debit the drawings account, the value being 3000. And next one is cash. Hope the drawings is from cash account, 3000 rupees. Okay, now create. Before I go for the 6th one, I'll go for the summary. In summary, what happens? See, we got everything. P&L account also prepared. Sales account 5000 rupees. Purchase account, wages account is there. Due to this, we have lost 3500. And of course, you prepare only trial balance. But here, what happens? We prepare the final accounts also, trading and P&L account balance sheet. So we got the balance sheet, liabilities, and equity. For even after every transaction, the final information is available. That's the beauty of the accounting software. You usually use the accounting software for small business also without any problem. Now, let's move on to the next one from 6th transaction, 6 to 10. Now see, paid telephone bill. So no new account comes. What is that? Telephone bill. And issued check in favor of Charan. Charan already open. Check means bank already available. Discount allowed, not open. So we have to open a new account called discount allowed. Received check from Beam in full settlement. So Beam account also already available, and check bank account also available. 10th, sold to Alex. Sales account is already available. Alex also already available. And Beam check return dishonor. Return dishonor, again Beam as well as all the account already open. So you no need to open. Only we are going to open further 2 more account. Whenever a new account comes, you open. Already existing account means you no need to bother about that. You just post there itself directly. How can you open the ledger accounts or create the new ledger accounts? Go to settings, chart of accounts, new account. New account is related to telephone means it should be part of income statement. You go and select from the profit and loss statement. New account. Okay, what's that? Telephone bill account. Okay, telephone expenses. Telephone expenses account. It's a part of what? Expenses. Create. The next one is all about, again here, profit and loss account. New account what? Discount allowed. Discount allowed. Okay. It's a part of expenses. Create. That's all. We have created. Now you have to pass the journal entry. Go to the journal entries here. New journal entry. Paid telephone bill on 6th. So I am going to feed the data for date 6th April, and telephone bill paid. Telephone expenses paid. What account is going to be debited? Telephone account. Telephone expenses. We have already opened. If we have not created, then that account will not appear. The value being 1800. And here what happens? It is by way of cash. Okay. 1800. Now create and add another one. Let's go for issued check in favor of Charan. Which date? On 6th. So 6th April. Narration, I am going to skip this for the time being. Payment is made to Charan, then Charan account. Issued check in favor of Charan. Oh, discount allowed by him. Then it's a discount received. Isn't it? We have not allowed. The discount allowed by Charan means it's a discount received. So we have to open discount received account. So what you have to do then? Go directly where? Settings, chart of accounts, new account. New account for what? Okay, new account for expenses or income. So I'm going to create from this one, this tab, new account. Discount received. Okay, discount received account. It should be a what? Yeah, income. Create. Now you can go for the journal entry. So I'm going for the journal entry. New journal entry for what? You should check in favor of Charan. The date being 6th April. Okay. Payment is to Charan. So Charan account debit. Charan account. The value being 25,000 rupees. 25,000 rupees. Okay. But while making the payment by check, no, so bank account, we make a payment of 24,000 only. Because another 1,000 is what? Discount received. Add one more line. Now post that discount received here. Discount received account. The value being 1,000. Oh, 26,000 in total, right? This is 26,000. Payment is 25,000. And discount receipt being 1,000. It's now cross verified, matching. Now create and add another one. So next one being receipt check from Beam, full settlement 15,500. Actually the amount recoverable from Beam being how much? 16,000 rupees. You can see here. The amount recoverable from Beam being 16,000 rupees. We received 15,500 as full settlement. Okay. So the date being 8th April. Here received check from Beam. Bank account. We receive only 15,500 debit. Another one being discount allowed. We have allowed. It's an expenses for me, so debited. Add one more line. That is for Beam account. This value being 16,000. 16,000. Is that clear? So create and add the next one. Now 10th one. Sold Alex on credit. Then sales. Which date? 10th April. So I am feeding the date here. 10th April. Sales to Alex on credit. Then Alex account should be debited. The value being 500 into 10. 5,000. 8% trade discount is there. Should be subtracted. 5,000 into 8%, 400. So 4,600. After the trade discount of 400, it should be 4,600. So 4,600. And it is in credit only now. So sales account. Sales account 4,600. 4,600. Create and add the next one. Beam check return dishonor. Whatever the entry we pass while receiving the check from Beam is going to be reversed. Okay. So for that, the date being 11th April. 11th April. Check return dishonored. Then the party is again debited. Who is that? Beam. So Beam is going to be debited. The value being 16,000. Already we knew that value. And bank account reversed with 15,500. And add. What's that? Discount allowed. Discount allowed reversed. Or simply you can name this being discount allowed 500 rupees. It is not discount received. Discount allowed is reversed. So it's a discount allowed credit. Clear? So with that, 11th day transaction is also over. Create. Now We now have 5 more transactions. What are the account to be opened here? Arun account. Do we have Arun account already? No. So we have to open Arun account, new one. And cash sales to Anand. Anand is not required because it's a cash sales. Cash sent to bank. Bank and cash already we have. Purchase to one two-wheeler. Two-wheeler then asset account. We have to open the asset account here. And in credit means you have to pay the amount to TVS. So you have to open one more account called TVS. So two-wheeler account, TVS account. And being declared insolvent, dividend of 60% is received in cash. So insolvent means immediately you have to remember to the extent of amount not received will be named as bad debt. So you have to open a new account called bad debt. Old newspaper sold. So we don't have newspaper account. So we have to open the newspaper account. Cash account already available. So those unavailable account are going to be opened now. So we have to go and open in chart reports in settings, chart of accounts, and the first one is Arun. Arun is a part of what? Sold means account receivable. So new account, asset side, Arun account. Arun account. Arun is part of account receivable. Create and add the next one. Now what happens? Two-wheeler. Two-wheeler. What about the two-wheeler? Non-current assets. The part of non-current assets. Create and add another. Next one is TVS. TVS and Co. Okay. So what is that? Accounts payable. So we have to make the payment. Okay, payables for the asset purchases. So it may be accounts payable or simply liability. So I may put that value as a accounts payable. Create and add the another one. Then insolvent, bad debt. Bad debt is a loss, expenses, old newspaper, income. So that will go to the income and expenditure. So I have to go for income and expenditure head, charts of account, where I have to go for this one, income and expenditure. I'm going to open the new account here. What account is this? Bad debt. Bad debt is what? Expenses. Create and add. Another one is old newspaper sold. Okay, old newspaper account. This value being income. Create. Now we'll pass journal entry for these transactions. Okay, to pass the journal entries, you go to the journal entries book. And no problem here. Everything is balanced currently. If you go for statement, everything is available up to the final accounts. Trading and P&L account as well as balance sheet is now available. Can I prepare trading and P&L account separately, sir? Of course. In the income, you group it. Trading items separately and P&L account items separately. You can group that one also, right? That way also you can go. So I just simplified in the beginning stage. Okay. New journal entry for 12th one, sold to Arun. What is journal entry? The date being 12th April. So 12th April. Arun account debit to sales. To sales. Sales account. Already the list is available. You can pick from there. The value being 5 into 600, 3,000 rupees. 3,000 rupees. Okay. Create and add the next one. What's the next one? Cash sales to Anand. The date being 15th. So I feed the date here. 15th April. And cash sales. So cash account debit to sales. Okay, to sales account. The value being 6,000. 6,000. Clear? The next one is cash sent to bank. Then that transaction happened on 15th. I feed the date first. 15th. Bank account should be debited, right? And to cash account should be credited, the value being 5,000. The value being 5,000. Okay. create and add the next one. Next journal entry is all about 20th April. 20th April. We purchased two-wheeler. So two-wheeler is asset. Okay. Two-wheeler, the value of the asset being 35,000. And TVS, the amount payable to TVS company being 25,000 because 10,000 is immediately paid. Issued check in part payment 10,000 rupees. 10,000 is paid, right? Issued check in part payment 10,000. So add one more line. Check no, so bank account. The value being 10,000. The bank being 10,000. Is that okay? The next one is, we'll move on to the 22nd. Okay. April 22nd. April 22nd. We receive only 60% of the amount recoverable from Beam. The amount recoverable from Beam, you know that 16,000 in the very beginning. He gave the check and the check dishonored. It means he has not paid the 16,000. Out of that 16,000 rupees, we are going to receive only a part amount, 60%. So that too in cash. So cash account debit. Out of 16,000, 60% being 9,600 received. To the extent not received will be called as bad debt account. The value being 6,400. Add one more line, which is nothing but Beam account. This value being 16,000. 16,000. Is that clear? Create and add the next one. Old newspaper sold. Old newspaper sold. Which date? 23rd. 23rd April. 23rd April. You sell and cash is realized. So cash account debit. The value being 250. And old newspaper. Old newspaper 250. Entry is passed. Create and add the next one. Create and add the next one. Is that clear? Now what happens? Old furniture sold. The cost being 2,000, 4,000, but sold for 2,500. There is a loss. There is a loss. Am I right? There is a loss. Okay. That's a loss. I put that loss here separately. One account to be open. Okay. There's a loss. Purchase from Kumar. We don't have Kumar account. Open the Kumar account. Arun returns one FM book. We sold and it is returned. Then it is sales return. Received from Alex, check in full settlement. We have already Alex. And the last one is say send cash to bank. Cash and bank both we have. Only 3 more accounts are going to be opened here. So now settings, chart of account. Furniture account is already there, but we have loss. For the loss, you have to open an account for the P&L account. That P&L account here, new account. What is that? Loss on sale of furniture. Okay. This is a part of what? Expenses. Create and add the next one. Kumar account to be open and sales return is there. So I'll first open the sales return. Sales return account. Okay. This is part of what? Expenses are, it should be subtracted from the income. Both the way you can show. Sir, if I show this being income, what happens, sir? In income, it's appearing in the negative sign, with the negative sign. So you will get the ultimate answer being the same. Okay, no issues. Sales return being income. Income reversal. Income reversal. Create. Then we have to open Kumar. Kumar is what? Asset account, right? So Kumar is a liability account, right? So I go for the balance sheet. New account is created. Kumar account. Purchased from Kumar. Then Kumar is my payables, creditors, right? Accounts payable. Create. That's all. Now, shall we go for the journal entry? So, three ledgers are going to be open. One is loss, another one is Kumar, another one is sales return account. So, we open all the three. So, I am going to pass the journal entry here. Passing the journal entry, you click the journal entries here. New entry. 25th April 2024. So, I am going to feed the date 25th April. Okay. Old furniture sold. Then we get 2500 cash. So, cash account debit 2500. Okay. Next one being we face loss. Loss should be debited, which is 1500. Another one is what? Furniture. Don't mean this being the old furniture, only furniture, right? Furniture account 4000 rupees. We have passed the entry. Create and add another one. Purchased from Kumar. Purchased from Kumar. The date being 27th. 27th April. Purchase account should be debited. The value being 50 cost accounts book, 220 each means 11,000. And from whom? Kumar. So, Kumar account 11,000. Okay. Create and add the next one. Arun returns one FM book, then it's a sales return on 27th. 27th. April. Sales return should be debited, right? Sales return account debited. One FM book. The per FM book cost us how much? 600 rupees. Here is. So, one book is written means 600 is there. To what? Arun. 600. Arun account. Okay. Sales return is over. Create and add another one. Received from Alex check in full settlement. The due as on 1st April. The amount recoverable from Alex on 1st April being here is 15,000. Okay. Out of that amount, 14,500 is received as full settlement. It means another 500 being what? Discount allowed. So, the entry being which date? 28th. 28th April. Received check from, then bank account 14,500. So, now discount allowed. Discount allowed. This value being 500. Then who has paid this? Alex. Alex should be credit. Alex account should be credit. 15,000. Clear? Create and add the next one. On the same date, cash sent to bank. The date being 28th. Bank account should be debited. The value being 11,000. 11,000. And cash account should be credited 11,000. Create. Now the final transaction. Interest due to Mrs. Singer. So interest and also due. You have to open two accounts. One is due entry, another one is interest account. Interest account, outstanding interest. 9% per annum for a month. Mrs. Singer's loan being 1 lakh. You know that. Mrs. Singer's loan being 1 lakh. He owed 1 lakh to Mrs. Singer. For that 9%, 9,000, but for a month it may be 750. So you have to open Singer account as well as interest account as well as outstanding interest account both. Goods taken for domestic use, drawings already available. Goods purchases already available. No need to worry about that. So we have to create two more ledger accounts. Interest as well as outstanding interest. Now settings, chart of account. Interest is what? expenses, no. Go to the P&L account, create here. What's that? Interest account. Interest on Mrs. Singer's loan. Okay, this is part of expenses, so I click the expenses here, create. Then outstanding interest on Mrs. Singer's loan, liability. Okay, representative personal account, so you have to create the liability. Liability means you have to create here balance sheet. The account appears in the balance sheet, should be created along with the balance sheet. So here, new account. What's that? Outstanding interest for Mrs. Singer's loan. Right. So this is part of current liabilities, but we don't have the classification, simply liabilities. If you want to classify that as a current, then you need to open the group. Group is common topic where within that head we have a number of different accounts. Like accounts receivable, we will have 2 or 3 account receivables under that. Create. Now go for the journal entry. For interest due, what is journal entry? The date being 30th April 2024. 30th April 2024. Interest account debit. Expenses no interest, so it should be debited. The value being 750. Just then we calculate it. And to what? Outstanding interest for Mrs. Singer loan 750. Is that okay? Create. The next one is goods taken on the same date, 30th April. Goods taken for domestic use. Then it's a drawings account. Drawings account debit to purchases. It should be reversal of purchases. Purchase account, the value being 500. The value being 500. Okay, create. Now everything is ready. Just go and see the summary. You get everything here posted. Asset side total is 4,65,050. Liability side, okay, that's a net loss, the loss being 10,700, and drawings is appearing the equity side. So what do you do usually with the capital plus profit minus loss plus additional capital minus drawings? You do that, no? That's what it is done here. 4,40,000 minus retained earnings as it is being the loss minus drawings, you will get ultimate equity being 3,25,800. Other than equity, liabilities being 1,39,250. If you add the liabilities and equity, you will get what? You will get assets value. Usually what happens, practically closing stock will not be available as a transaction. It's an event. Closing stock is an event. Usually you will pass the journal entry for what? You pass the journal entry for only transactions, not for the event. What is the journal entry for the closing stock? Usually you don't pass the journal entry. But you have to understand how to pass the journal entry for the closing stock also. I will guide that. It is available in final accounts lecture. You can go and see there. Anyhow, here I assume there is a closing stock of rupees 15,000 rupees. 15,000 rupees, not 50,000 rupees, probably bit higher. Like this we can assume. Opening stock being 3 lakh something. So I had to adjust that opening stock as well as closing stock and all. So opening stock we have 3,15,000, 51,000, but year end it may not be 3,51,000, it may be higher than that. Closing stock may be 3,65,000. How can we adjust that stock? How can we adjust that stock? Is that clear? I will explain that in detail. Before that, we go for the reports. Trial balance. Trial balance for which date you need? Trial balance from 1st April 2024 to you need to have trial balance for which date? 30th April. You give the date and create the trial balance. You got the trial balance. You got the trial balance here. Is that clear? The trial balance itself, they have segregated like income as well as expenses. Income and expenses. Okay. All the assets, all the liabilities, and debit items and credit items, as well as here debit and credit items. We got completely. But the trial balance is slightly different than the trial balance what we prepare. Clear? We got the trial balance. What more you want? Again, go for the reports. You can simply print this and hand over to the your accountant to file for the taxation purpose and all. You got this. If you are able to give this to your boss, okay, sir, give me your accounts, I'll feed and I'll prepare the trial balance. How much easy, see? Clear? This is ready. So if you want to prepare what? If you want to prepare other reports like profit and loss statement. For which period? Give the period here, date here. 1st April 24 to, we prepared up to 30th April. Okay, create. Now P&L account is made ready. So there is a loss of 10,700. 10,700. And if you want to create the balance sheet, go to the reports, create the balance sheet, new report, the date being as usual, start with the 1st April, ends on, reports, balance sheet, new report from 1st April. Oh, okay. Balance sheet should be as on. So the last date will be taken. Okay, as on. Usually balance sheet for a specific date. So that's why we have not been given the duration. But in P&L account, we have been given the duration. So create. So complete list is ready. Assets, under that current assets, non-current assets, liabilities. Okay, complete statement is ready. So you can simply email or print or whatever it may be, you can do print. And you can save this as being the PDF version also. Okay. If I save this, then it appears as a PDF form. Where I may save this in the desktop. Okay. Balance sheet. Okay. So now what happens? It is available here. You send this report to whoever you want to send, you can send this. Okay. So for whatever the period they want the income statement or trial balance or balance sheet, you can prepare and submit immediately. You want to have the backup, this data, you worked. Okay, for a company, a small company. I was also asked to prepare their accounts for their business. For every month, go and feed the data. Because once you created the account, usually the same account may be repeated month after month. In your case, in your daily activities, right? What are the expenses you are going to do repeatedly for a month? Bus fare, fuel, and some snacks and all. That's all. Around 10 items. You create only 10 items. Once you create month after month, the same item will be there. Thereafter, you are not going to create. But once in every month, you can find out how much you spent, how much you received and all, giving the duration and create this as a report. The reports are available here. Go and see the reports. Okay, so you can go profit and loss statement. Already created reports are there. This report is for from this date to this date. The next month you can create again from the 1st June to this month. Such a way you can create n number of reports. Collectively year on year also you can create. For the next month you can go ahead with the same. What could be the transaction the next month? The same transactions. Now see one more thing. Where do I have the backup files, sir? Move the cursor to the bottom. Okay. Clear? You will have the place also. Users, see here, when you come out, this entire backup file is saved here. C:, user, Sridhar, OneDrive, and documents manager. There it is available. I can now open the place directly. Okay. C colon users and Sridhar. Then where further? I forgot. OneDrive documents, right? OneDrive. Under that OneDrive, we have documents. Under the documents manager. Here is that SSA.manager, that's the back of it. You save it yourself or you can send it to anybody else. You can open wherever you have manager software, send this file and open the manager software, it will be available there. Okay, you can have a backup and hand over to the boss, the reports prepared month after month. So user friendly, right? So in your practical life, you have to understand that passing the journal entry is the most crucial part. The rest will be automated in practical life. You are not going to work all these things. Passing the ledger, posting that in the ledger. No, everything is done by machine. Is that clear? Hope. You can create n number of business also. If you are working for 5 different small businesses as a part-time accountant. Sir, my duty is to prepare your accounts Paka. Okay, I will prepare and hand over this. Give me some fees, that's all. 5 or 10 different companies you can associate with. So for all that 5 to 10 companies, you can create here and prepare the details. Give me the transactions for this month, you feed and create the report and hand over this. So user friendly, isn't it? So SSA. So we have the complete set here. Clear? So this manager software is so nice and it's also free. See, in case of stock, it is an event, not a transaction. You have to understand the difference between event and transaction. Transaction is the action between the two parties. I sell the goods, you give me money. I purchase the goods, I pay the money. I teach, you listen. So there is a give and take. It's called transaction. For the transaction, one giving and one receiving is there. So naturally, one debit, one credit will be there. But what about the stock? How can you pass the journal entry for the stock? Closing stock. So it is an event. We purchased some stock. We sold. After the sales, leftover item, is called stock. Result of the transaction. What is the journal entry for the profit and loss? If there is a profit 5,000 rupees, how can you pass the journal entry? Sir, I don't know, sir. Because it's an event. Result of the trading activity is the profit or loss, which is the event. In those event case, the passing the journal entry is pretty different. In case of opening stock, it is already available. Closing stock. From where will you get the closing stock? From where will you get the closing stock? Usually, it is available in the godown. Go to the godown, physically verify the stock's value and show. In our current illustration, opening stock being 3,51,000. Am I right? 3,51,000. And closing stock, it's not given in the transaction list because it's not transaction list. On 30th April, go to the godown, go to your shop, count all the available stocks and physically value it. That's called physical verification. Usually in your school days, preparation of final accounts from the trial balance may be given. Below the trial balance, there is a closing stock line. Because it is not a transaction, it should be valued. Physically going to the godown and valued and given, we assume, maybe 3,65,000 is the closing stock. How can you record this in the books? Okay. In this current illustration, let's see. What is the value of purchases? In expenses, we have purchases. 13,000, we have the purchases. The details being 11,000. In further details also you can see 11,000 purchases, 2,500 purchases, 500 maybe drawings. So net of that being 13,000 purchases. 13,000 purchases. Now, now, okay. See, opening stock 3,15,000, purchases here being 13,000. 3,44,000 worth goods available for the sale in this year. In your shop, how much of stock available for sales are? In the year beginning, we had 3,51,000 rupees worth of stock. In this month, we purchased 13. So in our showroom, we have 3 lakhs. Okay, 64,000. Sorry, 64,000. 3,64,000 worth of stock in our shop. By the end 30th April, if you go and physically verify, we found the stock available in the godown being 3,63,000. 3,63,000. This is what about the closing stock available. How do you get this closing stock? Physically valuing. Physically valuing. You go to the shop and physically value and find out how much stock you have. 3,61,000. And what about the 1,000 rupees worth of stock missing? This missing stock is nothing but sold it. This is what about the stock sold. Stock sold. This 1,000 rupees worth of stock sold for how much? Sold for 18,600. That's the logic. So we gained around 17,600. But of course, there may be some other expenses like rent paid and other thing. Because of that reason, our profit is decreasing. How to pass the journal entry? Opening stock is added to purchases, you know. Purchases are debit. Opening stock also debit. Isn't it? Usually stock appears in the debit side. Means asset means debit side. That should be now cancelled. It means it should be minus item, credit item. Debited to a purchase account, so it should be addable item. This is a journal entry. And what about the closing stock? It is going to be subtracted from the purchases. So closing stock is plus item, purchase is a minus item. Let's see for the opening stock, the journal entry being purchases debit to stock account credit. The value being 3,51,000. This is for what? Adding the opening stock with the purchases. By adding the opening stock with the purchases, we came to know how much of stock available for the sale in this year. Almost 3,64,000 stocks are available. Year end, how much stock left over? 3,63,000. It's an asset item, debit item. So stock account debit 3,63,000 to what? To it reduces the purchases value because it's not actually sold. So it should be subtracted from the purchases item. Purchased item sold. Okay. This value being 3,63,000. This is how you have to pass the journal entry 63,000, right? You have to pass the journal entry for the adjustment of stocks. Okay. See what you usually do in your study. If the closing stock given, post that value in the credit side of the trading account. Opening stock means debit side of the trading account. That part is not available here. Okay. How will you post that here? How will you post that here? Okay. Put that value here, sir. How can I write? You have to feed the details in a journal entry format, right? So I had to post this as a journal entry format only for the opening stock as well as closing stock. So for now, I'm going to pass a journal entry for what? Opening stock. Okay. Which date? 1st April, right? 1st April. Opening stock should be transferred to a purchases account. So purchase account is going to be debited to stock account. Okay. The value being 3,51,000. 3,51,000. Is that clear? So inventory disappeared now. Inventory disappeared. And instead of that, closing stock is now opened. Which date? 30th April. I am going to open a new account call, means the stock is going to be adjusted. New stock emerges. Stock account. How much is that now? 3,63,000 we assumed. And it should be subtracted from purchases account. So purchases account, this value being 3,63,000. 3,63,000. Clear? I am feeding this detail. Create. That's all. Now let's see summary. We got the profit here. Okay. That's how the inventory is adjusted. Now the closing stock is 3,63,000 rather than 3,51,000. The opening stock disappeared. Instead of that, new closing stock emerged. If you go for the purchases account, it will have all the summary here. So purchases 11,000 and another purchase 2,500. Opening stock is added. And there is a purchase return, not purchase return. Owner has taken drawings. Another one is closing stock we have. The closing stock subtracted. So net of that being 1,000 rupees. So sold purchased item is only 1,000. To the extent of sold purchased item is only 1,000. That sale is almost 18,000 something we have seen. That's how we can prepare completely. Clear? Now you can generate the reports as you wish. For the purpose of any small business, you can use it comfortably. And of course, you can go for customizing for any invoice, sales invoice and purchase invoice and all, you can create here. And quotation also you can create here. If you want to create some quotation. Or subsidiary books like purchases and receipts book, receipts and payment book, can I create that way? Yeah, of course you can create receipts and payment. So if I create this one, update. We have two more items extra, receipts and payment. What are the receipts may be, you simply post here directly. It's very simple. 5 receipts are there. Put the receipts only. Automatically it will be updated. This is a practical system. I passed using journal entry and prepare the entire thing. Of course, you can use the subsidiary books also. We can learn it later on or you can learn it yourself. Clear?